Welcome back. Hope you're having a good morning. Well, the Gift Nifty suggesting we pull back a little bit to kickstart trade, but plenty of stocks to discuss. Prakash Diwan joins us to help us out with just that. Hi, Prakash. Good morning. Let's talk about the two big banking names, Kotak Mahindra Bank and ICICI Bank. What do you make of the numbers? As well as, for Kotak Mahindra Bank, you have a new appointment as well, which the market will take positively.
Well, good morning, Nigel. So let me take Kotak Bank first because the numbers really didn't have anything very spectacular to talk about. It was just a quarter where they continue to do what they've been doing for the last many quarters, which means focusing on quality, growing in a very calibrated way. The cost of funds is an issue, and they've not been aggressive for a change to go out to the market to kind of borrow at very steep rates. And that kind of reflects in the numbers. But the key out there, I think what the market probably liked about the announcement was that you have somebody from outside who's coming in, and that always is an opportunity to reinvent, to revitalize the structure of the bank, build another team, enrich the team with newer talent. So my sense is, the market will probably start seeing that as a positive towards, the catch-up that Kotak could play in going forward in the next few quarters on the growth that they've let go by. So, that's what the numbers and the appointment tell you. I really don't think there's anything of a re-rating immediately. The ICICI Bank numbers were stellar. There was no doubt. What I liked about these numbers was this is exactly what an HDFC Bank used to do earlier, before all this merger overhang kind of came in. It's moving towards retail. It's moving towards all those segments that it had focused on, SME retail, which are growing very rapidly for them. The cost of funds has also been fairly benign in terms of, no escalation, which is untoward. The quality has improved dramatically. So I think if you look at the internals, ICICI Bank is the one that's kind of revitalizing itself. And, recently I was reading a report from Morgan Stanley, the top 100 business models globally, and ICICI Bank was actually the only bank that features there, which means that the diversification across businesses has helped, across segments has helped. And all that income that it gets from its other businesses is also kind of probably close to its peak. So, the engine keeps chugging even faster from here on. And they've seen some market share gains as evident from these numbers, which if they can hold on to, probably leads to a little bit of a re-rating, another 20-25% upside very quickly.
All right. Prakash, hi, good morning. I wanted your thoughts on Paytm because, Jefferies put out a note where they've said that now Paytm has finally entered the league of profitable fintechs. And that's a big deal, right? Considering how competitive the environment is. The numbers look good. EBITDA has improved quarter on quarter. But for an investor, can one still put in money here?
Absolutely. Good morning, Sonia. So I think between two quarters, what has changed? The price has probably moved from the 800 plus to about 900. 80, 70, whatever, closer to the 1,000 mark. And 1,000 is going to be a big psychological sound barrier of sorts. Once it crosses, there'll probably be a lot of people will start believing the turnaround is finally underway. What's changed for Paytm is it's owned up to its errors of commission rather than omission in its business model when they came after the IPO. And whichever areas they were bleeding, they've tried kind of plugging themselves. I mean, if you see the way the expansion is taking place, it's much more quieter, gradual, subtle. You really don't feel, they're going overboard on any of the new areas, whether it's loan growth, whether it's a POS business. And I think the ONDC onslaught, which is just around the corner, and we've started seeing some, very strong trends emerge, is going to be extremely favorably tied for Paytm's growth. So it's at that juncture of inflection point where it could start riding that boom. And remember, Paytm is the most omnipresent, platform which people use for money transfer. And if they were to start riding on that ONDC commerce growth, it's going to be a lot of business that will come. Of course, the loan growth area is something which they want to focus because that's profitable. Spreads are much faster, thicker, thinner. As compared to the platform, the payment platform. But that is something which will happen once they have a steady business coming from some other revenue stream. And that's eventually happening. So to answer your question, somebody wanting to get in, yes, if you have a long-term view, it's a great buy, at least for the next 40-50% in the next couple of years.